So what's MACD?
Awesome.
Indicated by the candles, right?
Exactly.
Okay. I see that there are a lot of different ways for analyzing price action. CJ, what are some of your favorites?
My favorite is something known as moving average crossovers. So basically how that works is that you take a period of time in the past, whether it be like 50 days or 100 days, and you take an average price of that particular point and plot it on the chart. And every new day, that average is going to change a little bit depending on the length of how long through history you're going. And when you pair two moving averages together, they show how price is trending in a particular time. It's like if we get one that crosses over another one, then it shows like, all right, there's a very strong uptrend happening here. Or say it crosses below, in that case you'd be like, all right, price is no longer trending upward. It's probably a good time to think about selling or going short, etc. So let's take a look at an example because I'm sure it's way easier when you're just looking at it visually. So the moving averages that I have here are the 8-day and then the 22-day exponential moving averages. And when you get a crossover on these two averages, it means that price is changing in a particular direction pretty quickly. And the underlying trend is like going somewhere else. So if you're here, for instance, when you get that crossover signal, it creates a sell signal. So you would sell short in this particular instance, and you would ride that down until there was another crossover. In which case, once you see the bullish crossover right here, you would say, all right, no more shorting. It's probably a good time to buy since positive momentum is coming back into the market.
I see what you mean. So you use by the first average point, or the first average that you see, or the first point you see a crossover in the averages rather, that's when you're like, all right, would be an opportune time to sell because it is going to take a downturn. But when they meet again later on, in that same finite amount of time, that ideally probably means like, all right, I should I should invest back into it because it's trending back up, correct?
Yes. So there's going to be a fast moving average and then one that is slightly slower. So in this case, the blue moving average is kind of slow, or it's slower than the orange one. And each time the orange one either crosses below it, that triggers a sell signal. If the orange line comes above it, that creates a buy signal. So whichever direction or crossover that the faster moving average is, moving, that's where the buy or sell signal is going to be.
Got it. I grasp that.
Awesome. All right, well, why don't we move on to something a little bit different, a little bit more advanced.
Okay.
This is known as oscillators.
Oh.
We talked about price action a lot before. Now I want to talk about like momentum. So one of some of my favorite indicators to use for momentum, why don't we start with the RSI? That is this red one that you can see right here. And when you're using that RSI, you want to look for particular like patterns. One of the very distinct patterns right here is a series of lower lows. So you have a low here that is lower than the previous, and then you have successive lower lows. So ultimately, you're creating like this downtrend. And when you're creating lower lows, but the overall price trend is creating higher highs, that tells us, hey, the upward momentum is slowing and it's probably going to reverse pretty soon. So when you see that kind of dichotomy between the momentum and the actual price action, it's important to pay attention to.
Got it. So you can use an RSI as a way to kind of flag the potential reversal of the overall prices indicated by the candles, right?
Exactly.
Okay.
Yeah, it's like a warning signal of saying, all right, my car is still moving forward, but the rate at which it's moving forward is decreasing. We still could go up in price, but the rate at which we're going up is slower, and so we're probably going to reverse if the momentum is beginning to fall.
Got it. That made sense to me.
So what's MACD?
The MACD stands for Moving Average Convergence Divergence, but we're going to make it a lot more simple than that.
Please do.
Basically, very similar to the RSI. It's measuring momentum of a trend. The only difference is that instead of looking for those lower highs that we are looking for on the RSI, we're looking for crossovers on the MACD. So let me show you an example. This right here was a bullish crossover. Like those moving averages that we talked about, when they cross, they create a signal. And depending on how the crossover occurs, it's either a buy signal or a sell signal. So for instance, this one right here, since you have the faster moving average actually turning up, it's creating a buy signal, somewhat near the bottom of where price is. And, it doesn't happen immediately, but afterwards you can see price then rebounds. Another example here is when you have a bearish cross. So the moving average, the faster one actually crosses below the slower one. And it doesn't happen at first, in terms of like price reversal, but it's saying, look, pay attention, the momentum of the trend is declining, you're probably gonna wanna do something because, that uptrend is now over. So it's specifically the crossovers that you wanna look for.
Understood. So do the bullish crossovers instead of looking for the general low end decrease that RSI's was. MACDs actually look for the crossovers instead, and that way can kind of predict not only the plateau but the reversal going back up.
Yes.
Got it.
Yeah, and I think the best way to use these things is to use them like in tandem with one another. So if you see a buy signal on the RSI, you see one on the moving averages, and you see one on the MACD, it's probably going to mean that your odds are better than if you were just getting one buy signal from one of the indicators.
Right. So it's not just like you use one of them and you're done. It's useful to utilize all the different indicators to make your decision.
Right.
Got it.